Thursday, the 5th of February 2026, and has been dumping very nicely for the past few weeks, since like mid January. And yesterday, once again, hit very close to, or actually hit, the downside third standard deviation band of the 3012 RMLR. It's also on the daily time frame, very far below, relatively far below the power means. Which power means? The returns, the power means of the returns. Right. That's if you look at the alpha trading indicators, you'll notice that the UPM, Universal Power Means band, is quite high above the current data set of Bitcoin. And what does that tell you? Well, it tells you that once the asset stops hitting that third band to the downside for a couple of days, or for a couple of candles, so in the case of the daily time frame, for a couple of days, then it is most likely to be in mean reversion, right? Mean reversion can go up, down, or sideways, so it could continue to drop. Don't kid yourself. It could just stop hitting that band and just walk down slowly and slowly until eventually it runs back into the mean at some point in a few weeks, when the future RMLR is predicted to dip down. Now, does it mean it has to go down? Or no, it doesn't mean it has to go sideways. No, it could very well mean revert and go, in fact, to the upside, as a lot of people with the hopium world view would hold. But what is it really when Bitcoin dumps? Is that a moment of panic for you? Or is that an opportunity? Right? Is it an occurrence of opportunity? Well, it depends on the time frame you're trading, and that's why we trade low time frames. Hold on, I will be right with you. I just need a minute here. All right, back with you here. So yeah, what does it mean when there is, in fact, a dump like we've been seeing, right, over the past, few weeks, really, since mid-January, and especially more precipitously over the past week, right? When we'd been warning you guys the whole time, right? It's like we could be dumping down very nicely. We gave you the probabilities to the upside, but also, and especially, to the downside, right? In the Alpha Trading live streams, we made it ebulliently and eminently clear that there was some nice shorts to be had, and of course to take those profits when they happen, because as you can see by, for example, the wicks on those daily candles, the prices don't just drop and stay low for the rest of the whole day necessarily, right? They very often drop and then bounce, just as when they go to the upside, they pump and then dump, right? Why is that? Well, that's because the returns with the correlation of the assets usually indicate the probable direction of price action, because price action just follows the returns, right? Well, the returns, again, the returns are returns on investment. So it is normal for the price action to zigzag around the mean of price, which is what happens. But we don't care about the mean of price, right? We don't care about the zigzagging of the candles around the mean of price. We care about the return on investment. And that is determining the price action, right? We care about the zigzagging around the mean of the returns. And that's why we look at the returns oscillator. We look at the volatility, right? Those are indicators that show us information about the returns. We care about the power means of returns. We care about the reverse mean of log returns, right? Because those are all tools that show us the current and probable future returns and price action that will follow. We care about looking at the AT Wolf forecast because it shows us the probabilities of the distributions, whether you're looking at normal distribution or Laplace distribution, that are happening now and well into the future, practically as far as you could possibly want to set them with any relevance to where you are. So if you're like an options trader and you don't want to, get our full suite of Pro Traders indicators, well, we happen to make an options trading package just for you. It's got 7 indicators that are specifically chosen for options traders, so that you can have all the best tools you'll need for trading options. It's like less than $50 a month. I literally think it's $49.99 a month. And for that same price, you can also choose the Volatility Trader package if you're not trading options and you just want to trade volatility and do things like scalp delta and just basically, make fast trades relatively, or make longer term trades. Is up to you. But again, at Alpha Trading, we highly recommend making relatively fast trades so that you don't get blown out of the water by holding bad positions on trades you should probably avoid. So that's what we talk about at Alpha Trading. That's what I talk about when I talk about crypto and trading stuff like that here on my channel. And you don't have to buy any of our tools. We're not pitching them to you in any hard way, because honestly, we don't make money selling our tools to people. It's just not the costs are negligible to you, and they barely cover any amount that our developers and our co-founder team put into this. So they don't really cover anything really. We just do this. We have small prices on our tools, pretty much to keep out the trolls who just want stuff for free and don't want to pay for anything, and just come to try to steal our indicators and try to rip them off, etc. That's the main reason we put prices on these things to begin with. But that said, you can come in and you can learn for free how to trade volatility by watching our Discord live streams or watching them on Rumble. You can get free education information in our server. You'll have plenty of access to that if you just join the server. It's free to join. The link is alphatraడింghq.com/Discord. We give this stuff away. We give this education away because we're frankly tired of seeing people getting wrecked, making bad decisions and trading, right? That's why we built this community many years ago. And that's why we maintain it to this day. And we don't expect to ever grow to be a very large community, because we're not out there shoveling this thing and marketing it and, doing all that stuff. Could we? Yes, probably. But that's not what we're doing. We're not interested in sitting around and marketing this thing to the world, right? We are interested in building a small and very successful group of traders, and that's what we've done over the years. And traders come and traders go, but generally speaking, the ones that stick around are doing very well. And even the ones that stick around and are quiet after they learn, they're obviously doing very well because they're sticking around. They're just quiet because, well, they don't really need to share anything. They've learned what they need to learn to make themselves profitable traders, and they continue to do that from what we know based on DMs they send us, etc. But yeah, we really honestly don't care if you join or not. It's available to you. We welcome you. We're very friendly. But if you choose to trade however you're trading now and stick with that forever, God bless you, good luck. Just keep in mind the statistics. More than 99% of traders in the retail space lose at least 90% of their capital within 90 days. The trading capital they put on the exchanges. And with all the leverage and everything else that's available in crypto, it's actually much worse than that, right? It's about 60 days, if that. Because a lot of people put on ridiculous amounts of leverage, which is something You really should not do. Leverage is just a way for the exchanges to get your money faster when you lose a trade, right? And that's what they want to do. They're in the business of doing that. That's why they give you 100x leverage, 150x leverage, 300x leverage, all these crazy high numbers of leverage. It's just like you're playing dynamite, you know? So, yeah, I highly recommend you come in and learn for free. It's totally free. It does take time to learn. So if you, look at your time as an investment, and it's fair to say that it is, because you're investing your time, the one thing you can't get back in life. But if you're investing your time, you should know it takes time to learn this. It's not an overnight thing. Some people learn it faster, some people learn it slower. Some people get it right away, some people it takes a while for them to get it. That's why we offer our education, and you can look at through years of our live streams and videos that we've made to explain to you how to use our tools, etc. It's all for free. Because again, we're not here to shill you our affiliate links to some exchange that's going to just take your money, and we're not here to sell you $500 a month subscriptions to garbage voodoo TA stuff, traditional technical analysis tools. That's not what we do. We use tools that we built, that we use. The tools are using the same maths that are used by the HFT firms and the quant shops that literally run the markets. And when I say run the markets, I mean they run roughly 80 to 90% of all trades on all markets at any given time. Okay. What does this say? Am I Sephardic? Yes, I am. That has nothing to do with trading, but I'm Sephardic and Ashkenazi, both. Thank you for asking. Also, thank you for liking this video and smashing the subscribe button to help me reach more people. I really appreciate it. I talk about trading, talk about crypto, talk about all kinds of different assets, but I also talk about geopolitics, Israel, what's happening in Iran, different conflicts around the world, different situations around the world. I talk about all kinds of stuff on this channel, which is one of the reasons it will never grow to be a large number, significantly probably, because I'm not just focused on one topic. I'm a real person. I have different interests, as most of us do. So, if you want to help me, though, to reach more people, I'd really appreciate that. So go ahead and do that. Smash the subscribe and leave a comment. Let me know what you think. Let me know what other topics you'd like, to speak about here, or you'd like me to speak about here. But yeah, Bitcoin and altcoins, when they're dumping out hard, when they're far away from the means, right, they are likely to at some point mean revert. That is a normal course of action. So that means that you're looking at a pretty significant occurrence of opportunity building up. You're also looking at, if you haven't already taken your profit, you've been sitting in a short for weeks, you should really be careful and consider taking your profits, because, or even if you've been in a short for days, right, or even a day, right, if you're in a profit, you should seriously consider taking your profits. And again, in alpha trading, we don't even trade for days at a time, right? Or at least not the founders, right? We typically run trades that last, I do anyway, and I know Bilbo does. We typically run trades that last less than 15 minutes typically, not always, but usually. And we don't stick around in trades for hours at a time. Again, you can with the calculators that we have because they're that good, but you are increasing your risk the more you stay in a trade. So if you're in a trade, you're profitable, and if you've been in this trade for however long you've been in this trade to the downside, relatively over the past weeks, you really should consider taking your profits at some point, if not now, probably sooner rather than later, because it could very easily see a very violent mean reversion to the upside, or we could see this thing drag out quite a while. What does it say here? I just finished a book about the history of the Jews in Arab lands. Sorry to change the topic. You're not changing the topic. It's totally fine. I'm still talking about this. From which country is your Sephardic heritage? I am from multiple countries with my Sephardic heritage. A lot of it from Egypt, Syria, Yemen, Italy, a bunch of places. And the Ashkenazi side is from Germany and other places. Anyway, back to the trading topic, which was the point of this video. If Bitcoin and alts do see a sudden and violent mean reversion to the upside, that is another reason you don't want to be using high leverage, especially if you're in a short, right? Because if it suddenly shoots back up, you lose those profits and maybe you go even in the red, and that's not worth it if you've been holding a profitable position for all this time, right? You want to take advantage of what the market gives you and say thank you, market, and then go on to the next trade, right? It's like if you're trading anything, right? I don't know if you've seen on YouTube, there's all these different videos of people trading stuff that are not on the market, the traditional markets. They're trading retail goods. It could be, whatever it could be. People buying and selling cars, people buying and selling watches, people buying and selling fancy clothes, whatever it might be. There's a lot of people doing a lot of videos about their luxury goods trading, right? Some of them are stores, like high-end stores selling brands at retail. Some of them are higher end, stores also selling brands at secondhand markets. I don't know why you have all these. I don't know why these videos are whatever. Anyway, some of them are individuals walking around, basically selling secondhand goods, previously owned or whatever you want to call it, goods, and they're basically looking to make some kind of a profit. So they'll buy, whatever it might be, watch for $1,000 and try to sell it for 1,300 or 2,000 or whatever. That's trading too, right? And the price they're going to get is dependent on the mean of returns on their investment and the difference between the ask and the bid, right? The price that the customer or the price that the potential customer is asking to buy it for, and the price that the potential seller is asking to sell it for, right? So the customer is bidding on whatever price he wants, and the seller is asking for whatever price, and wherever they meet somewhere in the middle or exactly on target, if they both agree on the exact same price without having to find the middle, that's what they that's what the fair market value will be. It's no different, right? The only difference is that when you're trading on markets like assets, of Bitcoin or stocks or oil, things like that, you're looking at candles, right? You're not looking at tangible goods, right? You're literally just looking at numbers, candles, and indicator lines, right? And the thing that's the most misleading out of all the information that people look at is the main thing they look at, and that's the price candles. And that's because the price candles are misinformation, right? Because the price candles are the result of the returns on investment, right? The price action is the product of the volatility producing the returns producing the price action, right? So the price action is the last thing you should look at, if at all. And we've demonstrated on our live streams and our videos many times that we are perfectly capable of trading without price candles. Why? Because price action candles, like I said, are unnecessary if you know how to trade volatility well. They're unnecessary if you know how to trade entropy well. They will mislead the average person. Yes, you can look at them for certain things. Once you get the hang of it, it can be helpful to know, etc. Mildly helpful to know where the price action is in relation to certain things like the VRE targets or whatever, but you see those numbers anyway on the screen, so you don't really need to see the actual candles. It just makes it easier, that's all. But only once you actually know how to do that, because otherwise you're really just kind of being misled by the most obvious basic information, which is why everybody looks at it first, and which is why that is the information that is pushed hardest onto the retail traders, because the people that push that information know very well that that's the information that people want to see, because they don't know anything about it. So they figure, well, at least I should know what the price is, right? And how it's moving visually. Well, the problem with knowing what the price is and how it's moving visually is you're missing the whole point of trading, which is trading the return of investments. That's what you're trading. You want to trade the volatility. And what is the volatility? It's the standard deviation of returns on investments. That's why we constantly say that. That's why we constantly show that in our workflows across different time flows, different time frames across different assets. It's all about the returns. Because let's say you buy, an asset at $100 and you're long, you bought it and now you want to sell it at 120 and you made a $20 profit, minus the fees and whatever. Well, great, you made a 20% return on investment. But if that same asset, you had bought it at $200 and you took the profit up to $240, you took the profit out of $240, you would still get that same percentage profit, right? So it doesn't matter what the price of the asset is. It matters what the direction of the returns is, and to make sure that you're in that positive return on your P&L. Even if the returns on the assets are actually going down, you want to make sure that if the returns on the assets are going down, you want to be shorting it, right? Because the price action is likely to short, to dump. And that 20% gain is a 20% gain regardless of whether the initial buying price was $100 or $200 or $500 or $100,000. It doesn't make a difference. It matters, of course, what your position is, what your position size is, but these are things you can control. It matters what the information is. This is information that you can have access to, like our tools, right? And it matters what your speed is, right? Your connection to the market. How fast is your connection to the exchange? Those are the three things you can either control, or that you can control, really. Those are the three things, right? Position / position size is one. Information. Everything else is really out of your control. The randomness of the market. You can observe the randomness. You can know when the market is random or in trend with our entropy indicator, but it's out of your control, right? The volatility, the entropy, the probability statistics, those are not things in your control. All you can do is read them correctly and then make the best decisions of what you should do based on the probabilities. And should you always be trading with the probabilities or against them? In general, you should be trading with the probabilities, right? You shouldn't be always trying to counter trade the market. If the probabilities are telling you the correct thing, you should go with that. If they're telling you overwhelmingly the probability is this, then you should do that. You should do this. When should you counter trade? You should counter trade rarely, and usually because you have information on a different time frame, usually a lower one, that says before that thing happens that you're looking at, something else is going to happen first, and you can take advantage of that something else before that other thing, before the main thing happens. In other words, you can front run the trade with a different move. Those are the only times you should really be counter trading, in my opinion. Hey, it's my opinion. That's all it is. With many years of experience doing this. So, yeah. By the way, to all of those of you who ask why I don't flex status or wealth or anything, sorry, that's not my style. I could care less about that stuff. I'm not a very materialistic person. Okay. So, if you're wondering why our channel on Alpha Trading isn't all about showing you fancy cars or fancy lifestyles or all this crap, that's not what real traders do. Even the ones who are successful, real traders on Wall Street, relatively successful or whatever, pulling in millions of dollars a year, they're not usually people running around showing off how much money they can spend. Will they do that occasionally at some parties, to encourage other people working for them, or to show off to their highly connected friends for political gains or economic gains? Maybe, sometimes. But if they're serious about trading, they're trading. That's what they care about. And I personally don't care about all that material stuff. So just a little message to those of you who are out there who've been messaging me about that nonsense. And if you know who you are, you know who you are. Anyway, that's going to do it for now, folks. I'll catch you all later. See you all in the next one. And, of course, tune in to the Alpha Trading live stream. Those start at 9 a.m. U.S. Eastern Time, usually Monday through Friday. Sometimes we do Sometimes, obviously, we take some holidays off, like big federal holidays, etc. But usually we do them Monday through Friday. Sometimes we even do actually run live streams on holidays. But most of the time we take those holidays off and we try to enjoy our weekends and our lives doing other things. Like me picking lemons off of this wonderful lemon tree. And yeah, that's going to do it for now. So see you guys in the live stream again. It's in the Alpha Trading Discord at alphatradinghq.com/Discord. I hope to see you guys there. And until the next one, I bid you all peace, success, and happy trading. All right, that's it. Bye for now. Shalom.